All right, the SP 500, the Nasdaq 100, we need to talk about a few things specifically here on the market. Now, yesterday's video, we had some pretty big statements. As we go back to that, you can see the video we went over yesterday. We talked about a massive, or at least a big rally coming in today, specifically from JP Morgan. I want to highlight that I did not call out that we were going to get this big rally or the shot to 410. You know what I mean? I did not say that. But what I did say was if we got a certain print, the key levels to be watching. So the fact that we opened up at 410 was really big. But again, I'm not going to say that, I made the big call. I said we were going to go to 410 because I didn't say that. I did not say that yesterday. And I like to always stay transparent with you guys. But when we look at what's happening here on the 4-hour chart, and as we look at what's happening specifically with this market, I want to say you continue to hit this supply level around 410, 411, and this just highlights the importance of this level. However, what I will say is we had some big changes on the day, specifically with the Nasdaq. What happened here? Nasdaq finally did something it hasn't done in a while. It broke through the supply level. So this level here is now invalidated. Okay, I want to highlight that. This level has been invalidated, so it's kind of like a good thing when you look at the market and we look at what's happening. So now we have to get rid of that level. That level is officially broken. But you could still look at this and potentially say you have somewhat of a triple top going on here. But I want to talk about the potential and what I expect going into the Fed meeting, which is tomorrow. I also want to talk about what our clown of a president is continuing to say on open markets and saying that's complete nonsense. Before we go into that, I want to highlight and ask you to do two things: like and subscribe. Every single day I talk about what's happening on the market, where we are going, and what to expect. When you come to the channel, you need to understand a few things. I try to be as unbiased as possible. Okay, so if you want to get a long-term viewpoint, every Sunday I release a big video, so you can check those out. And then every other day in the middle of the week, it's videos specifically on the market. If you are interested in getting more information about how I'm trading all throughout the day and things that I'm looking at specifically, day trades included, the Discord link is down below. But I do provide a very large category of free information here on YouTube and on Twitter, so I recommend following on Twitter. Let's get back to the video. So what we're going to do really quick is go over, I want to cover Biden here in a second, but I want to talk about just some key levels and CPI and going into the Fed meeting tomorrow. And then I'm going to go over some more broad stuff really quick. But if we look here, I do want to say right now with CPI, what happened, we talked about the chart yesterday and things to look at. So if we go back to what's happening specifically, I put it here on Twitter. You can go back to my page. We can see going back right here, we talked about the scenarios basically. So a 7 to 7.2 suggested a 4 to 5% move on the market. This was released from JP Morgan. All credit to them. If we look at what happened with SPY specifically, you can go to SPY and it'll just show you the direct percent. You ended the day total 0.74. I believe at highs you're at roughly 3%, roughly. So it kind of played out perfectly. And if we look at where SPY is at now, you basically hit supply, gave a lot of that up. And I want to talk a lot about what happened here in a second. But if we look at CPI, the overall print, you came out at a 0.71, which is some really bullish behavior. And I had a viewpoint of today that did kind of get knocked off. I did suspect if we had a really good print, and I believe this was a really strong print of 7.1, it was better than PPI. Just want to add that in there. But I want to say this right now. I thought we'd get some continuation, but all throughout the day, I do want to highlight what happened and what I believe was taking place here. If we look, I believe this was a lot of taking of profits. Okay. If we look at what happened, if we were really bearish, and I believe if this was necessarily really bearish, just overall in the market not showing up with buyers, I believe personally, sellers would have stepped right in and you would not have broken through previous supply. Personal opinion. Now, is it possible to triple top? It is possible, okay? I'm going to tell you the position that I bought today also. But going back into SPY, you're definitely, I believe you saw a sell-off, fill the gap, and then now you're trying to, find support, base, and try to push back up. Now, I'm going to tell you right now, the Fed meeting tomorrow, I anticipate a bullish Fed meeting, okay? Everything that Powell said he wanted to happen from his last presser, it's happening. All the numbers, everything we're looking at. And I encourage you, if you want to get a long-term viewpoint of the market, go watch this video right here, the China takeover video. Every Sunday I release a long-term viewpoint. That's the best way to get my overall viewpoint over the next few months. I have to do daily videos obviously here, so you're getting a short-term viewpoint. So if I'm looking at short-term the next 1 to 2 weeks, I do anticipate bullish behavior personally for myself going into Christmas. That's my personal outlook and what I see happening. CPI, all data is pointing to the upside. We also have job numbers starting to look better, which, what do I mean by that? You're actually seeing unemployment slowly start to rise. But I do want to play a clip by Biden because our president is saying absolute nonsense. And I am an advocate for speaking the truth here when it comes to any type of financial content, because I don't want you to be misled. I want you to understand what's being said, and if something's a lie or not true, I understand that your well-being is at concern. So roll the clip.
And our economy continues to grow. The economic report, the GDP is up even more than it was previously thought. We continue to create jobs, lots of jobs. And today, we've learned that the economy added 263,000 jobs in November. Now, we've now created 10.5 million jobs since I took office, more than any administration in history at this point in the presidency. And 750,000 of them are domestic manufacturing jobs made in America. Unemployment rate remains near an all-time 50-year low, 3.7%. And wages for working families, I want to say this again, wages for working families, in fact, over the last couple months have gone up. These wage increases are larger than the increase in inflation during that same period of time. And so we're in a position now where things are moving. They're moving in the right direction. As we go into the holiday season, here's what this all means. The Americans are working, the economy is growing, wages are rising faster than inflation, and we've avoided a catastrophic rail strike. It means our plan to build the economy from the bottom up and the middle out. You're tired of hearing me say that, but it's working. And the wealthy are still doing very well, while the middle class and the poor are having a shot.
Now, that was a little bit longer of a clip, but I do want to highlight what Biden said in there. We have wages outpacing inflation. Again, I say a lot of this stuff over and over here on the channel, but if we look at a few things at the market, wages have never outpaced inflation ever in history. And I don't think right now will be the start, and the Fed has even said that also. I do believe we have a political agenda to be met. Republican, Democrats, everyone, they all want to look good. It's all about looking the best possible. And that's the point of this channel, is to not look the best personally for me, but to help you guys do the best possible in the market. So I do want to shed the light on that. That's why I post the winners. That's why I post the losers here. So when you look at what's happening right now, I do want to say, I don't necessarily believe a bottom is into the market. I could easily see us retracing beginning of 2022 or 2023. Sorry, year flew by. But I do want to say, short term, I do think the possibility for upside is there because what's happening currently. I've gone over the broad long-term viewpoint, and that's my opinion there. So going into tomorrow, what am I looking at? First things first, I want to see continued higher lows be established. I want to see the trend continue, okay? I want to see higher lows continue on SPY. This is a necessity. On NQ, Nasdaq, what do we want to see? We want to mount and stay above 11.8. This is a necessity also. You need to stay above 11.8. If you're using TradingView, their stats are all messed up, so I'm sorry, they're just using terrible brokers. It's a big issue, but this is the real contracts on futures for the Nasdaq. You need to stay above 11.8. If you stay above this and you can base here, I believe you have room all the way back to 12.1 and possibly 12.25 since you've already taken out that supply right now. That's my personal opinion and what I'm looking at personally there. Going into Qs, giving you a better look here. You're clearly getting rejected at the 290 range right now to the high 289s. You came right to the top of the supply we had here at locally 297. Beautiful, kind of baseline off a key level 294 and then shot back down. So you need to get back above 290. You can base here. You're looking really good. But again, holding 290 will be very important and major key there. Going into SPY, what's happening here? Again, I believe just making higher lows is the necessity. But what I do want to highlight here on futures is, again, something we had been mentioning for a while. So I do want to highlight you have this wedge going on. You kind of push right back into supply. So this is still concerning, possible double top kicking in here. But something I want to tell you right now is the ultimate thing that we've been talking about, okay? The ultimate thing. Our indicators, let's bring them up really quick. I want to get rid of everything and make sure we're just looking at the important factors here. And what I want to show you specifically really quick, let me get rid of this so you can see. You have your 200 moving average. This is your daily time frame, your blue line. This is your 100. I think actually a subscriber notified me about the 100. I wasn't paying attention to it. But you've been pinching in between the 200 and 100, and you're back above the 200 right now. This does look beneficial. This looks positive, okay? Again, what have I been saying for the past few weeks? If you're below the 200, I still think you're bearish. I don't care if you're above the 100, but it's worth mentioning. If you're below the 200, you're bearish. If you're above it, you have bull potential. So going into the SPY, you need to be paying attention to that. Now, ES provides a really good viewpoint of this also. Looking at ES, you're going to have this going all night. Candle looks a little bit different, okay? You are below this, and this is the one I want to focus on. So right now, even though I think the Fed meeting is going to go well, you're still below the key level here. This is concerning. If you remain below this, this is bad. This is not good. You did take out locally this major level we had here, but look, I still want to say you are below the 200 MA, so you have to be cautious. You can't be getting overly bullish. I do want to say that. And a big thing that I told Discord today, and I want to highlight here, I had some trades going on here, but I want to say something specifically here. I really think the upside into the Fed meeting and after a primarily short-term view of the next 1 to 2 weeks, but I'm not betting the house. I'm not going too heavy. Like, for instance, when I traded Tesla, when I went on some other place, I was a lot heavier. I'm a shorter, smaller position. Right now, I went long on Home Depot. I'll go over that in a second. Reason for only having HD right now, not that large of a position in comparison to previous moves. So I do want to say that even though I have a short-term bullish outlook, I do want to say I'm not betting the house here. I'm being responsible with what I'm doing here and setting myself up. Because on top of that, if we really do continue, I believe there's a lot of potential for upside. So there's no reason to be just stacking calls here, right? But let's talk about what we traded and what we're looking at. And before we do that really quick, I just want to show you the overall trend here on the weekly still. You're still finding resistance at the top of this trend. It's still a very major level in Q also. You almost pushed out of it, but that's where you're at. So you're still in the downtrend locally. I do want to highlight, and you're below the 200 moving average on the weekly also on NQ. But let's go over Home Depot and some stocks I'm liking. I mentioned these yesterday also, and I told you what to look for. So with Home Depot, this is, again, favorite chart right now. It's very similar to like something like Boeing and what I was looking at there. So really quick, go to the daily time frame. What do we have going on? Clear double bottom here on the daily. That neckline breakout going over this double bottom to get that confirmation. You broke above, and then you held that neckline right there locally, almost at like 333. Now, if we go to something like the 1 hour, give you a better look, you are holding a little bit below, but I started averaging in around 331, 332, so I'm still sitting fine, and my contracts are for January. So I definitely want to see this. Basically, my stops are basically if it gets back below 330 and holds, I'm risking about 7% to 10% total on this trade because I have time on them also. However, with this position, again, if we start getting that momentum, I think you could easily run towards 360, possibly even 370. My contracts would be deep in the money at that point, and that's what I'm looking at. So I'm looking to give myself time so I can actually swing and play the run, right? This isn't a day trade opportunity. I don't like to post day trades on YouTube because it just isn't fair for y'all, and it definitely just seems like I'm trying to flaunt or show off potential gains. I don't like to do that. Like, I had a day trade on Apple, but there's no point in me going into that because you can't even trade it. So I like to just give y'all stuff that y'all can be looking at also. That's a big play here. Next up, I do want to mention Apple. I'm liking Apple, what's happening here. Now, specifically on the 1 hour chart, I have this key level back here that we were looking at, but the 144, it really should be 144.19, about right here roughly. That's your level right there, your previous swing low. And then you also found resistance here also if you go to a more zoomed in chart. And you can see here, you're getting nice touches. So actually, this is what I looked at day trade today on that double bottom down here. But I do want to mention I like Apple towards the upside if you can hold the 144.19. Very critical level. If you get below that, I'd be out of it. Wouldn't be looking for anything. But Apple's going to follow and track the SPY almost specifically. For instance, overnight, the contract went from 144 all the way up to basically 150 at, sorry, still really sick and still have a little bit of a cough, but let's keep jumping into this. Next up, talked about Amazon yesterday. What happened here? You broke out, kind of had like a little bit of a triple top coming in, and I was shorting these guys for a while. I ended up cutting my position yesterday after taking profits. But guess what happened? You opened it from 90 almost all the way back up to 96. Contracts went crazy, ballistic. I mentioned it yesterday, almost up 300%. You came back down, hit the previous triple top area, right, and bounced up. I think Amazon looks good. You're back above 92. And I think ultimately your target here, again, with a good outlook from the Fed, in a bullish market with continuation, I believe you're looking for 102 to 101 roughly as your next target. It's a previous highs from 2018 and 2019. Okay. Very big, major trade I would recommend keeping on your watch list. Next up, something we mentioned from yesterday. Again, Costco. What did I say about this one? I said, watch out for this one. Could be interesting. Basically, target was around 505, but you opened up the day from 487. You hit 498, came right back down, and you're pushing back. So what I want to see here specifically on Costco, start to get back above this level right here. I want to see if we're going to hold this area around 489, 488, 487 roughly. If you can get back above this, because I believe it's heavily shorted right now. It's being attacked. And I do think it has potential back to 505, 510 roughly. And the major thing that I was surprised to see on today, I want to highlight for everyone, was the fact that we weren't seeing any type of short covering or any type of gamma exposure, right? Going in with options that are deep in the money. And the concern here with that for me is, again, this lies more to the upside potential on the market. And what I'm looking at right now, you have a lot of people with puts, a lot of people betting on the downside still. I think a lot of people are still very bearish on the market, which is okay. It's fine. But looking at this, if you start to really push up and break the 410 level on SPY, I think we have a lot of opportunity to see short covering in the short term. Which, for an example, one of the biggest names you can see here is NVIDIA. Remember down here, we were shorting it. We got stopped out of positions. Guess what happened? We stopped here because that's where the shorts most likely were going to cover above 162. What happened from there? You went ballistic straight up to, almost a $30 run to 190. Okay, I want to highlight. So this is the potential on where you want to start weighing the risk to reward of positions. I'm not saying there's no money to be made on the downside. Again, if we flip to bearish and the Fed meeting goes bad, of course, I'm going to look for day trades towards the downside, okay? I'll probably end up cutting my Home Depot, being done, taking the 7% loss. But I'm risking 7% to make over 50%, right? That's how you're setting up your plays. You want to make sure your reward is always greatly outweighing any type of risk that's out there for you, okay? So that's why I'm always doing this. And right now, you may be looking at something like SPY and you're saying, well, look, you're at the top of this range. This is what's happening. Tyler, you're being too bullish. People keep calling me a permabull. I don't really know how when I don't have too many long positions. That doesn't really make too much sense. And I continue to point out every Sunday how the market continues to have very worrisome things happening. But if you're looking here, I do believe if you get over that 410 hump, it would be a lot of short covering, which would push you easily towards 420, possibly even 431, 430. Now, I'm not calling for that to happen tomorrow or next week or anything like that. It's all dependent on data and what the Fed says. But in my opinion right now, the Fed only can come out one way, and that's positive based on everything that's happening right now. So that's what I expect, and I expect a 50-point basis point hike tomorrow. Anything other than a 50-point, anything lower would be just crazy. I just don't think you're going to get that. But that's my personal opinion on the market. Last thing I want to mention is going to be Tesla. I did highlight this yesterday. So Tesla, definitely the most bearish stock on the market right now. And I do like to highlight when I'm wrong. And this is what I'm going to leave us out on. I'm going to leave us out with Tyler giving a bad note and, saying that, I was wrong on this. Specifically in the pre-market. If you don't know, I go live in the mornings around 7:15 to 7:20 until market open roughly. Past few days I've been really sick, so I haven't been able to, but I just started doing it again. Anyways, Tesla, you broke 52-week lows and pushed down. But before the market opened, I was telling people, I was like, look, highly unlikely if the market continues to show strength, which you were getting from CPI, you wouldn't see downside. Now, I will say, at open, you just pushed down on the market. CPI did not get the SPY to just continue tracking up, worth mentioning. And right now you're just scaling down with SPY. But you did end up breaking those 52-week lows, so I was wrong there. But again, I didn't go long on Tesla. I didn't say Tesla was something I would go long on. I was just looking at what was happening there. Right now, the only position I have is January 20th, 350 calls on Home Depot. It's my favorite play right now, and that's what I'm looking at going forward. I love what they're doing. I think the potential here is pretty awesome. And right now I'm looking for low risk, high reward opportunities, and I believe Home Depot has that in store for us, and I really like Home Depot playing out right now. Again, I'll post the losses as we go forward. Right now, I think I'm down like 50, 70 bucks, but that's my Home Depot position. That's how I view the market. And again, think the Fed meeting tomorrow goes pretty well, my personal opinion. If you have questions, comment down below. I'll see you tomorrow.